In this video, I'll show you why comparing higher versus lower time frames matters and how to combine them. This is especially helpful if you're switching from investing to trading, whether you're in stocks, options, futures, or Forex. Quick note though, I'm assuming you already or that you're already comfortable with trading view basics. That is to say, switching time frames, drawing support and resistance, and reading candlesticks. Now, if not, let me know in the comments and I'll make a beginner video covering those concepts, all right? So let's start with Tesla on the 1 minute time frame. Each candle represents 1 minute. So looking here, you can see in this context of the pre-market into the open, we can see price looks like it's trending upward, right? But if I expand the context, you'll notice it shifts into consolidation. So we had this drop here. Sellers stepped in, pushed the price lower on this purple down close candle. And then we had a push, buyers started to step in to push the price higher, but we didn't push higher above 330, 331, 332. So that is to say, not a clear trend, not a clear trend from the open, just pretty much consolidation. All right. So this shows why lower time frames can be misleading. They're great for fine tuning entries, but you need the higher time frame for real direction. So let's take a look at an example. So using Tesla here, here's the trade that I took for Tesla around 834. 834, which is the second candle here. Oops. The second candle here. Let me activate my drawing tool so you guys can see this. So it's the second candle here. Now, I bought a call, that is to say, a long position, aka I'm expecting price to climb higher, okay? Because buyers stepped in after pre-market consolidation and I liked the strong close on this candle. Now, price pushed up briefly, but then sellers took over, all right? I stayed in a little bit too long and ended up closing with a at 845 for a $60 loss. So that's this candle here. 845. So this candle here. All right. So now if we zoom out to the 4-hour chart, the bigger picture shows Tesla trending down since August 11th. And that's the context I should have respected. So you can see here, let me activate my drawing tool. So you can see here, this is August the 1st, and we started our trend higher, right? And August the 11th, which is this purple down close candle here, begins the reversal. So we pivoted on August the 11th and started to trend downward, right? Price started to fall. And as you can see, I'm going to zoom out here. You can see this pre-market candle within this context. We gapped up higher in price. Notice that we opened here at 328, so right in line after consolidation in the pre-market. This is the higher time frame 4-hour chart, and you can see by the wick here, this is that push that we saw in the lower time frame. So we did push higher, close to 332. But sellers ended up stepping in aggressively to push the price lower. And so we fell. Price continued to drop all the way till 11 o'clock. And then we started to push higher. So you can see the wick on this down close candle at the latter part of, towards getting closer to 11 o'clock, like around that 10 a.m. Range. And then we started to push higher. So with that said, I had to flip my bias. Instead of chasing, I just simply waited for a pullback into a key zone. And I'm going to switch back to the 1 minute time frame so you can see when I made my entry for a put, aka short, which is simply to say that I was expecting price to continue to fall. So now I'm back on the 1 minute time frame. Let me activate my drawing tool so we could take a look at the 905 candle. So we had this trend, right? Started to have this trend, pullback, trend, continuation, pullback with this green up close candle, continuation, pullback on the green candle, continuation, and then pullback. And what was I waiting for? 905. This is the candle that I entered in on, but I'm going to show you something here quickly. I was waiting for price to pull back into this 1 minute candle, up close candle pricing zone, right? Which is 322 is the high, and then 321 and change is the low. So anywhere within this 1 minute up close candle is what I was waiting for. Okay. So I'm going to mark this out really quick. Oops. Okay. I'm just going to mark out the high and low of the candle. So that was the high and that was the low. Now it's not exact because I'm on the mobile, but you get the point. Now what I'm waiting for is simply a break below this zone here, a break below this zone, and that will that's my signal to get in because sellers are stepping in aggressively to push the price lower. And as long as we continue to push below this, the most recent down close candle in the downtrend, that's what I'm expecting, right? So I'm just shooting for that. So I was in at 905. Sellers confirm the move. I enter the put. 2 minutes later, I close for a gain of $290. All right, so this is the power of combining time frames. Remember, higher time frame equals the bigger picture. What trend, what price, or excuse me, what trend is the price, right? Or did I say that correctly? Where is the price trending, right? Is it trending higher or lower? And the lower time frame equals precision entries. So overall, I lost $60 on the first trade, but made $290 on the second, finishing the day green. The lesson: always respect the higher time frame. When you use the lower time frame for entries, don't get trapped in the noise. All right. Drop any questions in the comments and let me know if you want me to cover TradingView basics in a separate video. And up next, I'll break down the Intel trade that I also took today using the same approach. So you'll have another example to clarify this concept. All right, it's your man Ace. I'm dropping the mic right here. Y'all have a good one. Till the next video.